What is going on? Today we are learning all about liquidity pools, how they work, what it means in a pancake swap or a Uniswap situation, what it means when I trade a coin and it gets burnt to liquidity pools or whatever that means. Look, this is a fundamental, just basic level understanding of liquidity pools. Now, if you want the more technical analysis and jargon of that, there are tons of other videos on YouTube that help explain that in a more technical way and way better than I could ever possibly even pretend to do that. This video is for like helping a 10-year-old understand liquidity pools. No offense to 10-year-olds, okay? But I just need like a little lizard brain understanding explanation of how liquidity pools work. So I'm just gonna use stick figures, okay? Stick figures and drawings. If you're new to crypto and new to this channel, my name is Aaron. I'm a brand new crypto investor on a journey to 1 Bitcoin. I consider myself a cowboy with a little lizard brain, gorilla arms, and diamond hands, exploring the wild west of cryptocurrency. So if this sounds like a journey that you would like to explore with me, go ahead and hit the subscribe button down below, hit the notification bell for any new and updated content, and of course, if you feel like a generous person and want to help me grow my channel, go ahead and give me a like button. I would really appreciate that. Now, when we're trying to get these new coins and new tokens, we have to go to these things called a pancake swap and a Uniswap. And when we trade, there's like fees and stuff like that. And when I read the website, part of the the transaction goes back to a liquidity pool. So I think liquidity pools are something that I should have a base level understanding, little lizard brain explanation of how that works. And so this is for all my friends and fellow cowboys who need that base level understanding. So I'm literally going to use stick figures. We're going to go to my iPad, and there's basically a problem here. The problem is that there is someone out there who wants to sell their Ethereum, who wants to buy Ethereum, and there's another person out there who wants to sell Ethereum. Now, in a traditional sense, they would try to find each other, but if they can't find each other, they would go to what's called an exchange, right? And this is like Binance, this is like Coinbase, this is like Kraken. And there's a whole bunch of, there's a bunch of problems with that and all that kind of stuff. And that's not in the scope of this video. That's not what we're talking about here. We're talking about stuff like Uniswap. And so Uniswap, what they do is they create something called a liquidity pool, right? And a liquidity pool is where these two individuals trade to. So if they're gonna buy, if this person wants to buy ETH, right, incoming ETH, they want to go outgoing, let's just say US dollars, okay? And if this person wants to sell their Ethereum, they want the incoming US dollars, okay? Just for this example, USD. Now, so what that means is that this pool needs to have and contain 1 part Ethereum and 1 part USD, right? That makes a lot of sense. So now these people are no longer trying to trade with each other or trying to change with an exchange. No, that doesn't happen anymore. Now they are trading to Uniswap and their liquidity pools. Now, the next question is, where does the money come from inside this liquidity pool? Well, there are smart, handsome cowboys like you and I, or beautiful, right? Who, on the side, we provide our ETH and USD, okay? And it's not just me, it's a whole bunch of us, right? Who provide this service. Now, why would we want to do that? Well, because every transaction that happens down here is taxed and there's a fee to it. And part of that fee gets paid to Uniswap and eventually gets paid back to us. And so we make fees, the fee rate on every single transaction. Maybe I could show you this, right? If I'm in Uniswap and say I want to trade in like 0.1 Ethereum, and then it kind of does its thing, it calculates and all that stuff. Let me try to get a better price here. It tries to calculate its price or whatever. No, insufficient. Okay, I don't have enough. This is embarrassing. So let's try 0.1. Okay, I have 0.1. Now, if I want to try to swap it, you can see here liquidity provider fee is 0.00000 whatever 997 ETH. That is the fee that if I want to swap this, I would be paying to Uniswap, and they would then distribute amongst people who are, in turn, funding this liquidity pool, these guys right here. Okay, that is how this liquidity pool works. Now, how does this all do this? What is the magic here? Well, the magic is a smart contract. It's my best way of making that happen. The smart contracts automatically adjust the prices up and down and adjust the pairings up and down as ETH and US dollars are getting swapped out all the time. Now, there's a problem with this, right? Or at least another level of understanding. Another level of understanding is that what if you wanted to not swap out ETH for USD, maybe you wanted to swap out ETH for, let's say, not USD, but instead Shiba Inu, right? Well, it turns out that maybe there's not a lot of people supplying both Shiba Inu and USD to a liquidity pool, and so that liquidity pool is very, very low. Now, if you wanted to swap out ETH to Shiba, I mean, I don't know this in reality, but like, you know, if it's just like a smaller coin or a new coin that comes out or whatever, the possibility of the levels of liquidity pool dropping, there's only so much money that is in this liquidity pool. Meaning, if the liquidity pool is low, you can't get out. You're stuck with that. You're stuck with that coin, right? If you wanted to get out of SHIB into Ethereum, right? If you wanted Ethereum and you couldn't get out, you couldn't get out because you're just stuck with SHIB because there's not enough Ethereum there. You need more people to pile in all that stuff. Now, for instance, SafeMoon, or let's just take SHIB. SHIB, I don't know the tokenomics offhand, but let's just say there's a 10% tax. Okay, I'm gonna take the SafeMoon stuff because that's like offhand I know that. Okay, we both know that 5% of that gets redistributed back to its holders, right? So it gets distributed back. But then the other 5% gets backed into a liquidity pool. How that works? Well, it splits it up. Of that, 2.5% gets back into SHIB and the other gets back into Ethereum or BNB or whatever it is. Not BNB, but you know what I mean. It gets split up into another pair. Essentially, it creates another pair up here of Shiba and ETH pouring into this liquidity pool. So it's always keeping that pool high, meaning the ability for you to exit out of your position in Shiba Inu into ETH becomes greater. Now, I hope that that's a base level understanding. Maybe I could get a little technical and show you exactly what QuickSwap's understanding of this is. So here we see a liquidity provider, right? That's the guys in red at the top, and they deposit their tokens, and the Uniswap pool is here with these tokens right here, and so they try to balance it out. Now there's a trader who trades with the Uniswap pool. It doesn't trade with another trader. They trade with that Uniswap pool, and they pay this fee, and then the fee gets paid into Uniswap pool. What they use are pool tokens, but essentially you get part of that fee back into you as a liquidity provider. I hope that's helpful. I hope this is a base understanding of how liquidity pools work. If you have any further questions, I mean, there's a lot of other technical understandings. This is a base level understanding. I'm gonna put this chart or web page into the graph. Again, this was very, very difficult for me to understand, but I hope this was helpful to you. Now, if you are feeling like a generous person today and you want to follow along on my journey, go ahead and hit the subscribe button down below, hit the notification bell, and if you want to help me grow my channel, go ahead and hit the like button. Anyway, thanks for watching. Lizard Brain, Gorilla Arm, Diamond Handed Cowboys. We'll see you guys at the moon.